Good afternoon. Happy Friday. This is Sean LaBelle of the Dekker Hewett Group. North American markets posted some exceptional gains here this week, all up between 7 and 7.5%, essentially offsetting the last 2 to 3 weeks worth of weakness that we'd seen. This sort of unexpected market rally is why we always urge investors not to try to time the market and get too cute around their long-term investment goals. If you had gone to cash last week in anticipation of a bit of volatility this week, of course, now you're underperforming your portfolio by between 7 and 8%. This is why we always remind people to just focus on long-term goals and disregard the noise. This week's Market Watch Weekly just dives into a little bit of the conversation in the U.S. election. While, of course, we don't definitively know just yet, we do have a good indication that we're looking at a Biden presidency and a Republican Senate. This sort of split is apparently ideal for the market here, as we're not going to get a blue wave that had some investors concerned about the tax implications and such. This week's Market Watch Weekly just looks into that a little bit more as well. Also discusses earnings lost this week amidst the election conversation was a continued rollout of considerably better than expected Q3 earnings. This week's Market Watch Weekly just focuses on that a little bit more. Not highlighted was the big U.S. jobs beat, which came out earlier today. U.S. unemployment dropped about a full percent here now. It's at around 6.9%. U.S. jobs for the month of October came in at 680,000. That's considerably better than the 530 that we were looking for initially. So another reason for continued optimism for investors. And that'll do it for this week's Market Watch Weekly. Hope everyone enjoys the weekend, and we'll talk to you next week. Cheers.